Morning, welcome to IG's Early Morning Call. It's Monday, 26th of June. Let's take a look at the headlines as we wait the start of today's session. And over the weekend, it would have been reasonable to expect these markets to be on the way down. But in fact, they're not. They're on the way up. After Friday's close, after that failed coup attempt, I think we'll call it that, in Russia over the weekend, with that news developing, which led to a drop in the weekend markets on the IG platform. But there has been those big heavy declines. Of course, last week we saw, I think it was the first week in 5 where we saw declines across the equity markets. And they were hefty declines as well, relatively speaking, but we're on a little bit of a rebound on the session today, looking for a slightly stronger start to the European markets when things get underway at the top of the hour. US banking sector very much in focus, but it's a global story with Goldman Sachs and JP Morgan cutting global investment banking jobs. And gold has hit the 61.8% Fibonacci retracement, and it's bounced. It's found support at that key 1910 level we've been talking about a lot recently, and the market's on the way up. But today's candle could be critical. Let's take a look at what's been happening on volatility, because the back end of last week I was reporting these 3+ year lows that we've got on volatility. Friday saw a little bit of an uptick, and we're holding on to that at the moment. Despite that, as I said, we do have a little bit of interest in buying these markets. Look at the big declines we've seen over the last 5 days. Still trading below the 200-day moving average for the FTSE 100. There's not much in terms of corporate news today. That being said, we're waiting Carnival Corporation out a little bit later on today, which does have a London listing. And we've got ABF out with what could be a pleasant surprise for investors this morning. I'll go into details on that in just a few moments' time for the London markets. Aston Martin, Lagonda in amongst the headlines as well there. Let me just quickly tell you what's been happening on the German Dax. We got a bounce off the 76.4% retracement. Friday saw the lows that we've not seen on this market since the 1st of June, and then came a little bit of a rebound on Friday. The markets did end on the way down on Friday, it has to be said, but we do have a little bit of buying interest at the start of today's session. And it's the same sort of picture that we've got here in the French markets as well, as we see the European markets get underway. The French CAC 40, just after Friday's drop below this rising line of support, we've got a little bit of a buying interest at the moment. We'll have to see how things go in today's session. Interestingly enough, if this low that we saw on Friday is the recent low, that's a higher low than we had back on the 31st of May. So a higher low indicates the market is going up. Is it going up or is it curling over? I think the next few days are going to be key on this, and it's really all about interest rates. It's really all about central banks. We've got the Sintra meetings this weekend in the Portuguese resort, where the European Central Bank Banking Forum takes place. Really big bankers talking this week. We've got Bailey, we've got Powell, they're all speaking this week, basically, and it's all been hosted by the European Central Bank. And of course, we'll have more on that as the week develops. And we'll have some more headlines, doubtless, which may mirror what the central banks have been saying, that they continue to be hawkish in what is otherwise a market where we're showing some frailties, excuse me, for some of the economies around the world. Let's take a look at what's been happening overnight in the Asia-Pacific markets. As of the close, we've got the Nikkei down, Hang Seng down, S&P, ASX all on the way down in today's session. Wall Street close. We'll go into some more details about this in just a few moments' time, but broadly speaking, after the close on Friday and during that later part of the Friday's session, we got some news coming through from Bloomberg reports. Goldman Sachs and JP Morgan announcing global job cuts because of a slowdown in the markets. Dow Industrials down 0.2%, S&P 500, similar sort of move lower. Nasdaq Composite down over 1% on the cash session on Friday. Let me just show you what's been happening on the 24-hour markets as the markets get underway today. This is the Nasdaq after Friday's drop that we saw. We do have a red candle here. There was a little bit of a gap up at the start of today's trade for the Nasdaq. There's not a massive move necessarily, but you can see the Friday's move on the way down. Sorry, the last week's move on the way down, accentuated here on the Dow Industrials. 33,784 is where we are there. Slightly better off we were at the cash close on Friday. So now let's go back and take a look in some more detail about what's been happening on the German markets. On Friday, I was talking about a risk event for this week, and I was talking about this risk event over the whole week as we see a number of data points out on the German economy, which could well end up, if we do see a continuation of this softness in the economy, could well end up with more downside to come for the German Dax. The Dax lost just over 3% last week, its worst weekly performance in 3.5 months. This morning, the German index could react to the Business IFO climate index out at 9 o'clock this morning UK time. Let's take a look at the expectations here. Economists are looking at to fall to 90.7 in June from 91.7 in the previous month. That would be a second straight month of declines. Like in May, the current situation and expectation components are forecast to fall, and more hurdles are lined up this week potentially. GfK consumer confidence on Wednesday. Thursday, we've got the June consumer price index and retail sales out on Friday. Now, let's take a look at what else we could well be witnessing around this trade, because the euro dollar is, and indeed could be, one of those areas where we could well see a move, depending on how much of a divergence we have on that EFO at 9 o'clock from what's expected. As I said, the word is that potentially we could well see further weakness in the German economy. We already know it's in recession, or what many are calling a winter recession. We saw the fourth quarter and the first quarter growth numbers coming in negative. It was only marginal in the first quarter, and there's the potential, I think, possibly maybe for a little bit of an uptick. But I think the longer term, it is dependent very much on what the European Central Bank does on interest rates. And I think the meetings, as I say, in Sintra this week could well be key with the European Central Bank in amongst the really big names to watch out for in terms of some of the highlights and some of the wording around whether or not the European Central Bank and the other central banks are going to be more hawkish than not, which is, I think, could potentially be negative for these markets. Now, let's take a look at some of the headlines. Associated British Foods in amongst the mix this morning, as I said at the top, could well be one of the positive stories coming out of the session today. The group reported group sales of 16%, up 16% on this time last year at 4.7 billion sterling. That was in the third quarter. Primark sales up 13%, just under £2 billion, with like-for-like sales growth of 7%, supported by higher average selling prices. AB Foods now expects adjusted operating profit, its key profit measure, to be moderately ahead of the 1.43 billion it made in the year 2021 to 2022. Let's take a look at what we've got in terms of the share price chart. I have this line of 1958 drawn on here. It looks like it goes all the way back to February 2022 when we saw this area of resistance up here. We have seen it peak out recently above that line. In fact, let me just draw a line up there, which could well be capping out of any gains you got today. But I certainly think this gain that we saw on Friday, bumping up against that line of resistance at 1958, I certainly do see a potentially positive start to the trading day today. If you like the idea of this story as a story where you should go long, if that is your choice of trade, that's not a trade recommendation, but let me just quickly highlight what you'd be doing in terms of your stop loss and so forth. You're entering the trade at 1955. If, like me, you think this is a positive story, your stop goes down here at the 1900 level with a view to taking it up. Certainly get a candle close beyond the 1958. If it's a really robust move up on this market, you'd be looking up to put your price target in here at 2076. So potentially upside here for Associated British Foods at the start of today's trade. Let me stay on the charts. I just wanted to change this onto Aston Martin Lagonda. Aston Martin Lagonda is in the news today. Aston Martin has been under a lot of pressure because sales have not gone as well as many had been hoping. Let me just quickly see if I can change this. I don't know quite why this is happening here. Let me just tell you what the story is. Anyway, Aston Martin Lagonda triggered the second shareholding in the company's Mercedes-Benz relationship. It's a bit of a rubber stamping, but it'll be interesting to see what happens to this chart. Don't look at that chart because that's not really going to be helping you in any way, shape or form. Let me just quickly come back and tell you a little bit more about the story because Aston Martin Lagonda, if we could come back away from this chart because this chart doesn't actually tell us anything. Doesn't seem to be disappearing off my screens. Aston Martin Lagonda triggered the second shareholding in the company's Mercedes-Benz relationship. It's a bit of rubber stamping, but it was the point where Merck could have decided not to trigger the continuation of the relationship for the long-term strategic cooperation. Additionally, Aston Martin Lagonda has entered into a strategic supply agreement with Lucid Group to create industry-leading ultra-luxury high-performance electric vehicles and powertrains. So a lot of news around Aston Martin Lagonda on the session today. Now, global airlines more than doubled their profit outlook for 2023, and this is as airlines from Cathay Pacific through to Wizz Air are benefiting from strong travel rebound. But which ones will benefit from the post-pandemic tailwind most? Angeline Long has more analysis.
The pandemic years are behind us, says IATA's Willie Walsh. And if you look at Cathay Pacific shares, You might be inclined to agree. Here's a look at how these shares performed in this session. Cathay hitting a 5-month peak, bucking the overall trend for the Hang Seng, weighed by hawkish Fed comments and concerns. Hong Kong's flagship carrier is expecting its first half-year profit forecast in 3 years. Not only did it benefit from a one-off gain from a stake sale in Air China, but travel demand is rebounding in a big way. Just showing you some of the other carriers like Ryanair and also EasyJet. Ryanair first, as you can see here, quite a strong trend line. Flagship carriers and budget airlines alike, like Ryanair, like Wizz, and also EasyJet. They're all benefiting from strong bookings and higher summer fares. However, all this could start to sour if the airlines don't manage the spike in demand. So where is the salad dressing? Well, orders for airplanes are piling up. IATA says that members are complaining of having to wait 6 months or more for a delivery. Airbus and Boeing say supply chains are to blame, and this problem is not going to be fixed anytime soon. So if you're going to pick airline stocks to trade on, make sure you pick those that can cope with this surge in demand.
Taking a look at what's happening in the air for some of those airline stocks. We're getting some breaking news coming through with Saudi Aramco and Total Energy, the French energy conglomerate. The two have inked a contract worth $11 billion with the two for the construction of a new petrochemical complex in Saudi Arabia. The facility will be integrated, according to reports, with a refinery in Jubail, and will feature one of the largest steam crackers in the Gulf. Aramco, and with a capacity to produce something like 1,650 kilotons of ethylene and other hydrocarbon gases. Now, this could potentially be a positive story for Total Energy, which I've got here up here on the chart. On Friday, it disappeared below this line of support at 52.26. You can see if we look back on this chart, it has been of interest, this area here, but it is, as I said, disappeared below that on Friday. This is possibly a positive stock story at the beginning of today's trade. Certainly one of the shares worth watching at the start of today's trade. That is Total Energy on that deal that we've just been hearing about with Saudi Aramco. After the close of the markets on Friday, we saw some negative news coming through in the global banking sector. Goldman Sachs announced it's starting to cut managing directors' jobs around the world as it cuts headcount amid a slump in mergers and acquisitions activity from companies and also from companies wanting to raise money. Bloomberg reporting that Goldman Sachs will shed 125 managing director roles of the near 40,000 employees the company has. Goldman doesn't report on how many managing directors it has, although in 2021 it promoted 643 to MD roles. Those roles also carrying a partnership qualification. Looking at what happened with Goldman Sachs All Sessions on the trading day on Friday, it disappeared below this line of support we had established, which was the low point we had back on the 1st of June at 31,429, closing at 31,477 when all was said and done, just above that as a line of support. Goldman Sachs shares falling on Friday after CNBC reported the bank is likely to take a large write-down for its acquisition of fintech lender GreenSky. Goldman Sachs has been running a sale process for GreenSky, acquired in 2021 for $2.2 billion, and may take a write-down on the $500 million of goodwill. Goldman Sachs is not the only company in this sector in the news. JP Morgan Chase and Company also announcing it will bring to an end around 40 investment banking positions as part of its effort to cope with the global slowdown. Again, from a Bloomberg report, recently Citigroup announced it's cutting hundreds of jobs across the company this year and is planning to shed 30 investment banking jobs and 20 more at its corporate bank in London. Just want to show you what's been happening with JP Morgan Chase. On Friday, it ended a down day, but it was off the lows at 138.86. Again, when you see a company cutting jobs, it is potentially a positive stock story. Citigroup is another one worth watching out for at the start of today's session. These are all session stocks, and they will all start at 9 o'clock this morning on the IG platform. After a week of heavy losses last week, Citigroup will open at 46.02. So the banking sector will certainly be the attention of the next coming weeks or so. On Wednesday, the Fed is due to release the results of its annual bank health checks after the market closes. And these results will dictate just how much capital banks need to stay healthy in extraordinary conditions, and how much they can return to shareholders via share buybacks and dividends. Now, banks aren't allowed to announce their plans for dividends and buybacks until typically a few days after the stress test results, but we can expect them the latest when they publish their quarterly earnings in mid-July. Let's move on to other areas of the market. Just want to rewind the clock back to Friday and take a look at the Baker Hughes rig count, because there was another drawdown in the number of rigs pumping in the US. Saw 6 oil rigs taken offline as more oil field owners judge the market just isn't priced enough to pump. US oil rigs fell 6 to 546 last week, their lowest since April 2022. The number of gas rigs on production rose by 6, keeping the total rig count steady at 687. There was a big drop in the price of oil on Friday, and then came a rebound, ending us out with this recovery in the market. And today's trade, despite the fact it's a red candle, there was a bit of a gap up at the start of today's trade. But at the moment, at least, we're trading at 69.83. I think the longer term chart looks like we're wanting to break this line of support at 66.59 at some point. One of the big events this week is in the Portuguese resort of Sintra. We get a lot of central bank meetings this week. Christine Lagarde will be heading up the meetings as the head of the European Central Bank. It's the European Central Bank Banking Forum. But what I think is likely to happen is that we will end up continuing to see the words that we've seen recently from central banks, that they remain hawkish on interest rates. Hawkish to the point, I think, which the markets just aren't pricing in at the moment. Some of all which affects the currency markets. When looking at the currency markets, it's also quite interesting to look at what's happening in the gold market. So I thought I'd take a look at gold now, and this chart here, because we have, as of Friday's low point, bounced off this line of support I've been talking about in the early morning call now for a week or so, a couple of weeks or so, at this 1910 level, this Fibonacci support line at 61.8% retracement. I've taken it from the lows that we had back on the 28th of March, when we saw this establishing its foothold here, and the low point at 1804. The swing high came with the record highs we saw at 2082 back on the 3rd of May. Since then, there has been this pullback. Look at the bounce we had on Friday, and it was partly a convincing bounce, and then came a drop down in the market. The market did actually end up on Friday, and at the moment we're trading at 1923. I think today's candle is going to be key. I think if there's any weakness developing in the candle shape today, pointing us back down to this line of support, I think then we've got a continuation of this short position all the way down then to this line of support down here at the 76.4% retracement at 1870. The fact we had a relatively convincing bounce on Friday off this line of support, I think I'm going to be waiting to place any further trades on gold until I get a full idea about what this bounce means and whether it's going to hold. But I think it could be key. I think if you are short on this market, your stop would go above this sort of area up here of 1970 or so if you're short on this, with a view to taking it down to this line of support. But I'd be cautious about that until we work out whether or not this line at 1910 is going to hold. Outside of precious metals, I think it's worth looking at one other area of the market, and that's what's happening with base metals, specifically with aluminium, which on Friday saw lows that we'd seen in the market, not seen since October last year, pretty much 8-month lows for the price of aluminium. The Metals Council has said that aluminium is now a strategic metal, which means that people maybe should be holding, or countries should be holding more of the metal in reserve. There's an interesting quote that we saw at the back end of last week. If we see a continuation of the recent declines that we've got, we'll break this line of support down here and go down to this next line of support, which was established back in September last year at 2081. I've yet to see any positive news positive chart move on this coming out from the news that aluminium is now a strategic metal, but it was only a minor comment, I think, on Friday. For me, more so is the direction of the MACD, which is opening up at the moment, with the MACD on the way down, indicating momentum is, I think, possibly still picking up on the downside. Aluminium has a little bit of a leaning towards this idea that if economies are going to go into recession, I think that demand for aluminium is likely to go down. Staying on the charts, just wanted to update you as well on one other area. I think it's worth mentioning this. As of the back end of last week, we saw these these 1 year highs that we saw, this breaking of the line at 31.40, all the way back to levels not seen since the 7th of June. But since then, we've seen a little bit of a drawback. Bitcoin is pulling back on from those highs that we saw last week. The way to play this is Coinbase. All sessions on Friday, it ended up at 2-week highs at 61.33. That's it. We're back at 10:30 with the chart in the markets. Do watch out for ABF and Total Energy to start today's trade.